TGIF, everyone, and TGIF, that central banks have ended their week of mystery. Hello, Sinatra, Michael Weissman. Hey, Bran, how you doing? Yes, night of the round table. Arnis A, hey, welcome to F.A.C.E. All right, so Bank of Japan, same as it ever was, like that old tune from MTV. Is that what happened,
Peter,
Ryan?
Who was that? Same as it ever was. Peter, what's his face?
I forgot what band it was, but you know, same as it, I still remember, same as it ever was. Is that what we had last night?
Yep.
Right
a completely flat BOJ.
Yeah. What a week. You know, I know that risk is bouncing today, but is Grega here? Because I wouldn't mind asking him a question, but I just want to show you Amazon. I talked about selling it last week, and Blake asked me why, and I said, I don't know. And he said, well, they raised prices. But just look at this daily. And this is it gave up 10% in 5 trading days. Okay. I don't think it's just a normal correction when markets act like this. You know, it's not just backing and filling. It's left a couple gaps and pretty negative looking picture. I mean, there was no bid until today. You know, we're approaching major support, but I would say, even though I'm not an Elliotician, that this was impulsive. Doesn't look corrective, where, you know, maybe this kind of action's corrective. You know, you pull back, then you try and rally and fail, but this was all straight line move in a week. So even though we're up today, I don't think that yesterday was a low in the S&Ps. I mean, it, you know, very oversold. And VIX, as long as it's holding, it's giving up something here today. But, you know, this too was a nice breakout with nice follow through. So I think there's more. The bigger picture on VIX is this is big resistance up here. This 18, you have a trend line. And then if you get through that, you go to a weekly trend line off this was the October high in VIX, and then this was the March high in VIX when we went to 3,800 before we took off. So that's taken out at 26. I know that seems like it's a long way away, but VIX will do nothing, and then do everything in a few weeks. So I think that this week was decisively negative in the S&P despite this bounce. And I was talking 4,200 by mid-October. I may have been too conservative. You know, almost looks like we could get there next week. So
I don't know if it can get past your squiggly lines, Dale. And good morning, by the
way. It's guiding.
Oh, look, there's more. There's new ones.
Yeah, I mean, I don't know where these things.
All right, I knew someone was asking me to demo my new system, so I had to hit the brush function and
what did you
squiggle
do?
Around.
Did you dip a snail in red paint or something?
I did a shot of tequila, and then I with a beer chaser, and just started working on my spaghetti indicator again.
Yeah, so it's talking heads, by the way, once in a lifetime. I thought it was Peter Gabriel. I thought Peter Gabriel was talking heads.
Yeah. Okay.
Hey, Dale. I mean, you know, based on everything you just said this morning, or you know, you're talking about the VIX and you know the Amazon's coming off, and you know, the pretty impulsive. Everything that you're saying suggests to me that we're going into Friday. We've had a pretty bearish market this week, and we're getting a bit of a recovery. But you think there's going to be sellers stepping into this rally, this recovery that we're seeing this morning? I mean, it is Friday, and we do have PMIs coming out today here in the U.S., which everybody's going to be watching really carefully.
Your
especially
point
that services data.
Who wants to go home long is the point, right? Is that what you're
I mean,
Yeah,
that's a good question. It's a good question. We got a lot of we have a government shutdown looming, and who knows what the news is going to bring us over the weekend regarding our lovely
and that can't be
political
a
circus act that we have going on over here in the U.S. So
that can't be a black swan because everyone's watching the swan flying around.
Right.
So they're usually surprises, aren't they?
I mean, the surprise would be that we actually do shut down, because you're going to have everybody's going to say, and I mean, it's worth saying and noting, they threaten a government shutdown every few months and nothing ever happens. So people are going to go along nonchalantly saying, don't worry, they'll fix it. They're going to come down. And you know, we might actually have a shutdown. Now, a shutdown is more of a shutdown, and just, you know, it's more of it's kind of a sideshow because there's a lot of most payments will be made. I mean, but you know, there would be some suffering, I guess, and
it's an shutdown. It's not the full on one. This, because remember they had that months ago, and they did a deal, but this is the period where they need to pass that deal that they agreed months ago. So I don't know, it's like last minute rain. I don't think it's going to be a full on shutdown if it does shut down some things, but not everything. That's my impression of it.
Well,
anyway.
Will they be able to fund Ukraine? Because you know, I hear they're running out of ammo if we don't get them some.
Well, you know, if Biden wanted to up that by 28 billion or something, but he didn't want to give pay rises to US soldiers.
Look, we could actually solve the United States homeless crisis with all the money that we've spent in Ukraine. So, I mean, it's, you know, I mean, and I'm not going to sit here and say what's right and what's wrong, what should be, where money should go, or, you know, because I'm not obviously a politician. I'm just saying that, that's a lot of our money has gone that direction. So, but let's talk markets. Dale, we had the BOJ last night. Kman, that was the most groundbreaking BOJ meeting that we've seen yet.
Did you say ball breaking or groundbreaking?
Yeah, ball breaking.
one of those where well, actually he did as expected, but not as feared or what may have been. He's just going his snail's pace again, and we're chatting about that and reflecting on it afterwards. I think there's a clear, he's sending us over to at least October, but I think there's a clear message in here as well, saying that I won't do anything before the government puts all this stimulus in place. And the reason why we are not really breaking higher in the dollar yen, I think, is twofold. It's we are at very different levels than where we were back at the end of July, because then we were sub 140, and now we are already at lofty levels. The US yields have already gone up a lot. The dollar is very high, or at least very strong against the rest. That's one reason. And then the second one is I call them the three musketeers. Matsuno, Suzuki, and Kanda have been warning us over the past 24 hours that they're keeping a very close eye on it. So the market's a bit reluctant to really take it higher. But since he hasn't done anything, if the rest of the world doesn't collapse around it, I see this grind to 150 should just be a matter of time, really, right?
Quick question, Kate. I forgot to ask you on the Flow show. I can't remember if it was Suzuki or one of the others. They mentioned again about talking with other foreign central banks and other authorities. Does that perhaps step up the rhetoric a little bit?
They will do in the US. They will talk to the US Treasury, possibly the Fed. So EMOF will probably talk to Yellen and Yellen, but we may have missed that. Like a week or so, or a week or two ago, said something, and she said it fast as well before the prior interventions, that she kind of agrees with if currencies are misaligned to do something about it. So she clearly, I think they have the green light from Yellen. Now, Bank of Japan is probably going to call the Fed and the ECB if they intervene, because they do communicate with each other. They already do on a regular basis, but when it's close to interventions, they will have nearly daily contact for sure.
It was more the case that it's appearing in conversation in their quotes now more and more than it did.
Yeah.
Was he yelling on mushrooms when she met with him? And I just want to bring up one other thing we talked about earlier in the week about the yen pressing the highs, and that the yuan would not. This is a nice little failing rally in the yuan.
Yeah.
It looks like it may, do this. Have something like this from here. I mean, the form was good enough. It didn't hit the line, my line up here, but the form was good enough for a 3 drive. It looks vulnerable to me. What's the implication of the
short, mate?
What's that?
I took a little add to my short at 31.80 odd yesterday, and I've just knocked it out at 30.04.
So what's the implication if we do get a wave down here in the yuan, that the yuan's recovering? Does that mean that some of the things that China is doing is beginning to work?
That's going to be the perception, right?
Yeah.
But we need the investors' perception that China is getting out of their slump. Then this thing can completely turn around. For the time being, it's PBOC keeping the CNH in check. Otherwise, we would have been trading higher.
Okay, so they're intervening.
Well, they're intervening in the way that they keep their dollar CNY fixing very low, and every time we get to the 2% band top above the dollar CNY fixing, something or somebody is holding back the dollar CNH from rising as well. So that is clearly the case. And the rest, I mean, they're trying to buy time, right? And with time, they either expect the speculators to get discouraged from taking positions, and investors trying to get them back on board. If they succeed in doing that, then your dollar China goes back to 6.5. But
we've also got to watch the US dollar side of things now as well. The Fed have potentially peaked out. So, what pressures there were to send the dollar higher might be abating. And that's going to play on the other side of this pair as well.
Okay. Hey, Dale, let's real quick. Let's talk. Do you mind if I take over?
No problem.
Okay. It's Friday and you got Mark Chandler coming. By the way, it's going to be really great because he's going to be able to review the 42 central banks that actually met this week. I think he's probably got something to say about all 42 of them. I'm just kidding. There wasn't 42, but you know what I'm saying. It's going to be, it's going to be a busy one. Hey, I wanted to ask Kman and Ryan, basically, I know you guys are in the Flow Show, and the Flow Show was pretty, probably fairly quiet, and, following, the BOJ wrapping up the week. We've had, just a really busy week, obviously, but we were wrapping up the week with all these PMIs. So what was your read on the PMIs that we got? And so let's start with you, Ryan. What jumped out at you today?
Still all pretty much in contraction. There were a few bright spots in services. They all seemed to move up a little bit. Australia was okay. That went into expansion. All the others moved up a bit, apart from the UK, which moved down, which obviously Bailey tipped last night or yesterday.
Yeah, so it was a huge surprise.
Yeah, still in control. I mean, manufacturing PMI went up, but it went from 43 to 44, which is still just crap, but less crap. Right. So everyone's still in contraction, but services has just put in a little tiny bounce. But for the US, if that comes in with rosy numbers, then the dollar's going to be the growth trade again. And, you lot will be shooting your guns in the air and shouting USA all around town.
What do you mean we're going to be shooting our guns? You think like every American has a gun? I only have like 7.
Yeah.
I mean, but some people like Dale doesn't have any.
You have 5 times more guns.
I gave mine away.
Don't you? 5 times more guns in the population.
I don't know what the statistics are, but absolutely 100%. I hope North Korea drops some people on our lands, and we'll see what happens there. Just kidding. I'm joking, guys. I'm joking. Holy cow, it's Friday. You guys got to joke a little bit. Okay, so Kman, what'd you make of the PMIs? And I mean, and let me ask you this: are we going to get U.S. exceptionalism again? Are you expecting that? I mean, because the PMIs that we're going to get, I mean, those services PMIs, where are they? Right here. We're expected to come in just slightly above 50. Could we get a contraction today?
You know, I've been short sterling for a good while, and I covered it after the PMIs today because I just don't want to take the risk in case those PMIs all of a sudden start to follow the rest in Europe, pan-Europe, and start to go lower. If they come in better, then I think next week is going to be. It's also the final week of this month. We're going to see that last rush into the dollar. But if they start to show weakness, then watch out, because it could weigh on the yields and have like people being long dollars trying to get out of them before the weekend kicks in. You know, so I'm very cautious here right now, and I'm happy to have taken it, and we'll ride it. We'll see what happens. If they're better, we need to get back into.
You know, what's interesting is you point out that, you know, the dollar index is really, you know, here we are brushing up against that 108. This is 105.80s, which if you look over here in March is 105.80, whatever, 88 or something like that. You know, I was talking to Helene Meisler yesterday. So I just met with Helene yesterday on Traders Summit, and she's an equity market person. Her husband's Ken Morrison, who's a big, you know, he's been a commodities dude for like 50 years, and she used to work with Jim Cramer, and you know, Helene's been around. Great. Yeah, she's awesome. I love her. We always like to laugh because we have done technical analysis with actually drawing technical analysis out, you know. So her and I, we talk when the camera's off, and we just chat forever. She's great. But even her, who's not a currency person at all in the least amount, was really focused on the dollar. She's like, she's thinking that, you know, kind of along the lines with, I'm sure, a lot of equity market people, that, you know, the dollar's really got a hold here. And if it doesn't, and we see a breakout in the dollar index above 106, that is going to be her. That's like one of her indicators that says this stock market's really going to start correcting here. So it's interesting that a lot of people, I know we've been looking at it, obviously, Kman, you just brought it up, but we've been talking about it quite a bit here. But it's interesting that other market participants that typically aren't in currencies are really focused on this as well. So really big levels. But, you know, it's interesting how the dollar's just kind of stalled, even though yields are breaking out. What do you guys make of this move in yields? I mean, I look at the 10-year, and I still think, okay, we're at the 127% extension, but channel support comes in a lot further lower. And like, if you look at this and you think about today, so today we've got the PMI data coming out. Let's say the PMI data is just in line. Let's just say it's in line. It's not bad. But, you know, services PMI still comes in above 50. You know, let's say it's 50.4 or something like that. And, you know, not too far off of analyst expectations. We can't ignore the fact that the bond market's in breakdown territory, and yields are in breakout territory. And that might freak out some people at the end of the week. I mean, we are in breakdown territory, right? You look at it. I mean, here's the 30-year bond market. Here's the 10-year note market. I mean, we are breaking down. What do you guys make of this move? And who in the hell is going to be a buyer here? I mean, who's going to be the buyer of last resort now with all this issuance coming? What do you think, Ryan?
It's a good question. I mean, who's going to be the buyer? There's always a buyer, but it's like Kay said yesterday, things always look offered at the bottom. And it's a case of what is going to drive yields higher. I mean, obviously rates aren't going to go higher potentially. Real rates could keep going high, obviously, as inflation comes down. So that's going to keep the money flowing in, because again, it's just sort of increasing yield on an inflationary basis. And really, it's just all,
has been buying bonds.
There's always going to be
a genius. Jeff Gunlich.
Hey, we got a little bit of an echo here. I'm not sure.
I know. Is that me?
Well, you sound like an echo, but I
yeah. Okay, yeah, now it's better.
Yeah, much better. Okay, what did you say, Dale?
Well, it's Jeff Gunlich has been, buying bonds for 6 months and thinks they're, a great buy.
He ain't so much the bond king anymore, isn't he?
I don't know. I mean, he's still, people still bow down. I don't get it.
Yeah, is long bonds the new Widowmaker trade? Look how long short bonds was the Widowmaker.
Yeah. Right. This is 6 months, just so you guys understand. If he's been buying bonds for the last 6 months, this is what it looks like. Kman, what are your thoughts here?
I forgot the question. No,
it's about yields. The breakout in
well,
yields.
you know what? I mean, I'm a slightly more nuanced. I think it doesn't have to mean that the dollar or yields go, or the dollar go down when yields top out. It's not because yields top out that the dollar has to go down, because there still will be a differential. Then it's going to be a question of growth. For the time being, those dominoes are not falling. We have seen yesterday the weekly jobless claims. They were slightly better. There are other markets which are not doing that well, but then you got the US Treasury still issuing a ton of bonds. Next week, by the way, they are going to be on it again. It's really going to take those PMIs, for instance, but no, usually the ISM is more important than the S&P, but I think for the short term, today may see a move as well. I don't really see what's going to really bring them down right now.
A crash would.
But a crash in what, Dale? In
equities risk.
In equities. So you think the equities lower will pull yields lower?
This time, yeah, temporarily.
It could be. It could be, but for the time being, it's not happening, right? The yields are higher with the equities lower. So, and there may be, and we were talking about that with Magic's in the room as well. There may be just this last rush, where the market goes all bananas, because there's been a lot of US debt increased during the pandemic as well, outside of the US, and some things are US driven, and you wonder who is going to buy the government debt, but you also have to wonder where the other countries need to finance themselves, and I think it's like this is what's happening right now in the rates and in the yields market and in the bond market, is people needing to finance themselves, and not only the US Treasury.
It's everywhere, right?
Now, the FX market is a strange thing sometimes, right? Because I mean, the market has already bought dollars, and usually buying dollars before something else happens. So now we are stabilizing here, but we are on just below or just above important levels. I mean, I showed them today again on the flow show. 106.1020, very important on the euro dollar. We are below now, but 123 figure 20 is important on the cable as well. Dollar yen is very close to very important levels again, and then you look around the spectrum. A lot of currencies are very close to important levels. What is a bit puzzling right now, with the yields flying and the equity markets coming off, is how do Aussie, Kiwi, CAD, even the MEX and the Rand, emerging markets, why do they hold up so well? So there's answers, but there's a lot of question marks as well right now.
Yeah, they're right. And the Aussie is really, really sticky around the 64-cent level. But I got to point out, let's talk equities, and then we got to talk Canadian retail sales is coming out in like 5 minutes. So I'm just going to show you guys. This is the S&P. You could argue we're at the neckline of the head and shoulder pattern. We're at really key support, and we're holding it this morning. Now, whether or not we can hold it going into North American trade, and into the end of the week, we'll find out. But I would say that 43.30 is pretty critical. You know, we get below 43.30, it's an elevator ride down to the 4,200 level, which is the 200-day moving average. Big breakout point, channel support. You can see it in the very faint blue here. So you can see there's a, you know, triple confluence of massive support down here if we get to 4,200. And that's where ultimately bulls have to hold. I mean, just, you know, bottom line, even if we get a little bit of a pullback here, but you know, it's S&P is not the only driver. Obviously you got the NASDAQ that's, you know, also at pretty critical support there. You got the Dow that's already, you know, kind of below. Whoops, let me get rid of this. Let me
the DAX too.
Yeah, the DAX is around the 200-day moving average. You're right. But you got the Dow is below the wedge support. You got Russell 2000s playing into the, you know, it's up a little bit this morning. You know, it's up. The futures are up, so it's up a little this morning. But the head and shoulder pattern still goes lower. You got the German DAX, which we cover. You know, in ForexAnalytix, you can see we're, you know, at the 200-day moving average, obviously at really critical support. Arguably, if you want to put your money in equities, you probably just keep them in Japanese equities at this point, you know, as long as we stay above this 31,000 level. But overall, you know, markets are vulnerable, but we're at pretty critical support. So I think we just watched the S&P. We're only 20 points off of support here in the S&P, like 20, 25 points, which we can see within 30 minutes in the S&P. So don't forget, we're only 30 minutes away from support if things get a little unruly on a Friday at the end of the week, after a very tough week and very volatile week in the markets. Last thing I want to cover is obviously retail sales is going to be very good this morning because it's already leaked in Canada, because you can see it in price action. So we should have a very strong Canadian jobs report. I'm joking, but I'm not joking, because Canada is notorious for leaking data, and it has been in my entire FX career. It's one of the things you kind of lean into if you see it ahead of news. Anyway, you can see the dollar Canadian has just been bleeding. You can attribute it to crude oil that's just being stationary, maybe a rally on risk, but dollar CAD has rolled over from 135, but we're heading back to that 134 support. What do you guys make of this level? I don't know if Kman, Ryan, I don't know if you guys are both long still. I'm still long some. What do you guys make of this?
Going to be a solid level again. It was solid over all the events, the FOMC particularly. So it's had two cracks and it's held. I'm still a bit more bullish CAD than I was. So another move down here, you might want to be a bit careful, because the rally did get hit pretty solidly up at that 135.20. So a bit of caution on this one. You know, if you miss the last two goes, then you don't want to be trying this one with as much risk potentially as the last two attempts.
Hey man, you got any views here?
Agreed. I'm looking at the Canadian crosses, and the Canada is doing very well. So I'd be careful if we undershoot the US PMIs, or I'm not sure about the retail sales, but
I like that chart.
Yeah.
But I'd be a bit careful myself. Canadian dollar is relatively strong right now. So yeah, if we get an okay PMI in the US, as I said in the room as well, then it's probably going to show as a support again, 133. What is it, 70 figure around there? Yeah. That's going to be watched, but watch the crosses as well. Watch that Canada, and we're back at year highs. So and Euro CAD very weak as well.
All right. Well, we do have Canadian retail sales coming, and guess what? We have Mark Chandler. He's going to be here to break down all of these. How many central banks was it, Dale? Did I say 42 central banks today? Joking. Come on, it's Friday.
Don't
you guys
Piggy Bank.
Joke. What's that?
And Piggy Bank reported.
And Piggy Bank reported today.
You know what it said to me? I'm hungry.
All right, let's see what these Canadian retail sales do to wrap up this week. Now, remember, we do have PMIs a little bit later this morning, so don't think that you guys should run off and go anywhere. We still have some data coming out in the U.S. after this. So, but retail sales coming up here in just a few seconds. So stand by. Let's see what we get. Yeah, how strong that. Oops.
Drum roll. We need a drum roll.
Do need a drum roll. Here we go. There it is. Hey, look, core retail sales, big number.
1% ex autos, 0.3, which was a small miss overall, but hot because you take the cars out of it.
No one
Damn
knew
leaks.
No one knew it. No one knew it. All right. Well, dollar CAD sitting on its lows, but we're approaching some trend line support down here. I would say this 134.15, 134.10. You get one last push, maybe get a little intraday last minute gasp of air down here at the 134.20s. We'll see if we see that and then get a little bit of a bounce. So I want to say thanks, guys and gals, for being with us all week. It's been a hell of a week. I was tired last night, and tonight I'm probably going to collapse and be slobbering on myself on the couch somewhere.
We don't need to know that. Thanks, Blake.
Yeah, you know, I'm just
doing your private times. Up to you, mate.
But Kman, Ryan, glad you're feeling a little better. I know you were a little under the weather this week, so glad you're feeling better. Dale, have a great interview with Mr. Mark Chandler. I met with him earlier this week. I love Mark. He's probably one of my favorite people in the FX space to really break down the markets for you guys. So make sure you all stick around, and you should buy some of his books.
I bet you say that to all the traders.
I say that to only you, Dale. And Mark. Yeah,
you know what? I want to thank the team too for a busy week and their commitment to helping the community through it, and odd hours and everything just to keep people from stepping on landmines we used to step on. And great content all throughout the week on F.A.C.E. I put out a tweet yesterday. If you're not coming in here to listen to the team and then to listen to the interviews, because there were so many people that talked about this decline coming prior to it coming in the S&P. So there's a hole in your intelligence gathering if you're not doing it. And
and don't forget the flow show that happens while you and I are fast asleep, Dale.
So these guys got to come in and share what they do, what they say on the flow show, which helps me even though it's after the fact. So Kman, Ryan, thanks very much for your expertise.
Thanks,
Have a great weekend.
And Blake, your leadership, and Greg has stopped in and helped people this week with his call on the dollar for another push up, and mission accomplished, because we build up and edify traders every day.
Thanks to you, mate, as well.
Yeah, thank you, Dale, for always being here, and appreciate you.
Great weekend. Yeah, have a great weekend, team. And Mark Chandler, Mark, Blake's a fan. I'm a fan. You have a fan club here at ForexAnalytix. Welcome back.
You guys should be in sales.
Huh?
You guys should be in sales.
I should be. I have been my whole life. Like me, accept me, listen to me.
I was going to say I'm going to leave you in the capable hands of Dale, but I want to say thank you, Mark, for joining me earlier this week on the interview, and hope you're having a great trip in New York, and we'll look forward to hearing your insights here with Dale. So I'm gonna mic out.
So what are you doing in the Big Apple, Mark?
I was at a conference, the Foreign Policy Association, which is an interesting organization. It's a bit like the Council on Foreign Relations, but perhaps a little bit less orthodox, interested in education and a wider audience. I spoke at a panel yesterday. The UN has their opening sessions this week, and so the Foreign Policy Association had these conferences around it.
Okay. All right. Yeah. What'd you learn? Anything that would give you a new narrative or paradigm with what you're hearing there?
Well, there's a lot of discussion about China, of course, and I still think that the sentiment that, like, sort of, if there's a consensus in the market that such a thing exists, especially in the U.S. and I'd say Europe, maybe even Japan, that the big risk in the world is China. I don't see it that way, but I think that is really the general consensus. But I think that some of the talk that from other panelists yesterday sort of suggested that China is committed to trying to reflate the economy, and that there likely to be greater signs of its success in Q4 this year.
Okay, so how about the end of this depreciation of the yuan being part of what you heard? Because for a while, the action in US dollar yen and the yuan were kind of married together, and the yen is pushing against the highs and the yuan is lagging this time. So anything in this decoupling where people think that China's getting it right if their currency rebounds?
Well, I kind of think that the currency. So how does China manage the currency? It manages it primarily against this basket, of which we'd imagine that the yen is a big part of it. But it's not only the mechanism of managing the currency, but I really think about the mechanism. And why are we selling the yen? We're selling the yen because of a big policy divergence, right? Even earlier today, the Bank of Japan didn't really give us anything to suggest an exit. They're the last of the major countries with negative interest rates. And so people use the yen. I mean, when I should say we retail people buy something, an asset, we make an investment, we want that asset to go up. But I think that more sophisticated market participants and institutions don't think of it that way. Partly because when they buy something, they're not using their own money. It's OPM, other people's money. That is to say, you want to buy the bonds, or you want to buy S&P 500. Don't do it with dollars. Sell the yen, convert that yen into dollars, and then do it. So basically, have it so that you are short yen, long stocks, or long emerging markets. And because of the offshore RMB, we can use the Chinese currency as a funding currency.
I heard that came out about a week ago, that started making the rounds, that people were going to start using the yuan for a carry trade. Are they doing
Well,
that?
I think that's what people have been doing. I think that the reporters just caught wind of it.
Okay. All right. Yeah.
So to me, what this means, Dale, I think, is that it's going to be hard for the Chinese to stop the RMB from selling off. And today was only today it looks like it's going to be the second day that the dollar closes above 730 against the onshore yuan. The other thing I point out is that typically the offshore yuan honors or respects the 2% band that's really applicable to the onshore market. But in recent days, we've seen the offshore market disregard the onshore band. And so I think the market's still bearish on the Chinese currency. And we did see a little bit of a bounce in Chinese stocks today. The Chinese are trying to talk about maybe lightening up or reducing some of their capital controls to encourage foreign investment. And so I think that might have helped the Chinese stocks. I do like Chinese stocks in general. I think on valuation grounds, I kind of thought to myself a bit earlier this summer that, do you want to buy the stocks of a country that's raising interest rates and likely to have to tighten fiscal policy, like in the Eurozone or the US? Or do you want to buy the stocks of a country that's easing monetary policy and likely easing fiscal policy? And so I thought the answer would be yes. And so I've got my toes wet a little bit in Chinese stocks.
Do you do it through indexes or individual issues like F.A.C.E? Is that what you're going
to? No, I did it through the MSCI index. I don't know enough to trade individual Chinese stocks. And these days, I'm not sure what you're really buying, because they don't really trade in the U.S. as an ADR per se.
Okay. Any reaction to Xi's move on Apple, tit for tat, as a retaliation? Do you think that there's, this is an element of what's happening with China? And you know what, if you were a Chinese citizen living in a communist regime, would you use Apple phones when you see all the government officials banning them and not using them?
Yeah, I don't know. I mean, I think that, You know, we've done a good job here in the U.S. at blocking Huawei. We try to discourage people from using Chinese apps. So I don't know, partly tit for tat, but partly, if I were in China, I'd probably do the same thing. Remember when Obama was visiting Germany and they found out that Merkel's phone was taped, was recorded, was bugged, and not by Russia, not by China, but by the United States. And so I think that if leaving aside communism or whatever system China has, I personally don't think that the U.S. would feel that much better if China was a dynamic democratic country. We would still be threatened by it, given the processing of rare earths, given the dependency that we have on things like even X-ray dye.
Chemo, all the shortages, people that need chemo drugs, they come from China. Everything does.
So it doesn't make sense that the U.S. is so dependent on China, but it doesn't make sense that China is so dependent on the U.S. either, given the geopolitical tensions. And again, remember, Dale, earlier in our careers, there was a congressman from Missouri who took a sledgehammer to Japanese and South Korean cars because we thought they were subsidizing them, giving unfair advantage of them, blocking our cars from their markets. And so again, I just think that we in the U.S. play too big of a role, or to emphasize too much about Chinese communism. You know, I grew up in Chicago. Chicago is a one-party state. Literally, the Democratic Party has run Chicago and Cook County since almost as long as the Communist Party has run China. And so I just think that we make too big of a deal about it, but China is definitely a competitor, economics and politics, leaving aside ideology. So I sort of think of it a bit like Catholicism or Christianity. Christianity did not spread because people found the word. Christianity spread ultimately at knife point or sword point or gun point. Wars expanded Christianity. Similarly, no one's rushing around, no one in the world is rushing and saying, we got to adopt communist ideology. I think that what people want is an alternative to the U.S. So no one likes the bully in their neighborhood. It's always a bully in someone else's neighborhood that we try to side up with. But I think that in the near term, China is going to have a tough time controlling the RMB when the dollar is so strong because of this policy divergence.
Okay. Do you think Chicago being democratic all those years were partially responsible for the terrible sports teams that we had to deal with growing up?
Yeah, you know, I'm still a Cubs fan, but it is mostly scar tissue.
Oh, I tell you what, it is great training to be a trader, to be a Cubs fan, because you learn to live through adversity and disappointment. Anyway,
that's true, but you know, the danger for traders is hope, right? We do our homework. We have an idea about how to manage our risk and our exposures, but hope is not the basis of a strategy, despite my love for the Cubs.
You know, I say, like, hope is the oxygen of life, but the carbon monoxide of trading.
Very good.
What do you think of all this central bank activity? What was your takeaway with, I think Blake said 42 central banks were active this week?
Yeah, so I of course, I think the Federal Reserve is most important. And I think what the Federal Reserve, oftentimes, you know, I'd say that what central banks do is more important than what they say, but it's not true this past week. What the Federal Reserve said was important. I think the most important thing of what they said is that interest rates will be held higher for longer. And what that means in practice is that even though the Fed didn't raise rates, they took back about 50 basis points of cuts that they anticipated last year. And when I look at the Fed funds futures, the market had been leaning in that direction anyways, thinking about the first cut won't take place till closer to the middle of the year. And that's more or less where we are now. Maybe it's a Q3 next year for the first cut. But I think that signal, and I see the chart you're putting up with U.S. interest rates. Of course, U.S. interest rates rose on it. And I think that is the key support for the dollar. Even though, like what you guys were talking about earlier, European rates have risen as well. But the U.S. economy is in a better position to withstand higher interest rates. You know, I look at that Atlanta Fed GDP Now tracker, still looking at something like 4.9% for Q3, which is, I mean, it's probably faster in Q3 than Europe's going to grow this whole year.
Okay, and there's also the narrative that when there is a pivot and rates begin to come down, that they'll come down faster in Europe and elsewhere in the world than here in the U.S. So the dollar won't lose that interest rate advantage. Do you
Yeah,
agree with that?
I don't know about that. I mean, I do think that you know, there is a, when I look at the swap market, the market's pricing in an ECB rate cut also around the middle of the year, fully discounted by early Q3. But for me, in my experience, I'd say the Fed leads in both directions. When it's tightening, we just do things bigger. When we're tightening, we tighten more aggressively, including on QT. And when we're easing, we ease more aggressively, even though we don't go below zero. So I don't know. I do think that the dollar, once the U.S. economy breaks and the economy weakens, I think interest rates will come down. And I'm thinking that despite all this optimism and this this U.S. exceptionalism, I don't think it's so exceptional. You tell me that the U.S. government will double its deficit this year, and real wages will go up. And I say, yes, that's exactly what economists expect to underpin interest rates and the dollar. So I think, though, that beginning next month, we're going to see a major turn in the U.S. economy. I'm looking at a lot of headwinds. Not only is the UAW strike going to broaden, and many of us have to pay back student loans for the first time in 3 years. But I'm also watching this higher oil prices. And I know on the first cut, higher oil prices, we see, I mean, it's partly why CPI, PPI, and retail sales were elevated when we saw those reports. But ultimately, I think the Fed looks through that. That's why they focus on the core rate of inflation, excluding food and energy. And most of the U.S. economic downturns in our lives have been preceded by a spike in oil prices. And I think that, you know, to me, what's happening, it's not that the OPEC countries are ganging up on the U.S. or anything like that. I think it's pretty straightforward. Many U.S. states, Europe, and Japan are talking about getting rid of internal combustion engines in 12 years. And here I am in Saudi Arabia or the Middle East, and I've got a lot of wealth. A lot of the wealth of my country is still underneath the sand. How can I maximize that? Because my big customers are going to be having much lower demand if they get rid of internal combustion engines. So I think this is about national self-interest. And I think that Saudi Arabia in particular has shown itself to, again, want to be the swing producer.
Okay. And Mark, did you make anything out of, wasn't much hoopla about the launch of the BRIC currency? What was that?
We think about the BRICS or now the buzzword global south as if it's a singular noun, but it's not. I'll give you a quick example about what's happening in the UN. Brazil and India want to become part of the Security Council. China and Russia are blocking it. Here's what happened this week, too. Poland, who's annoyed with the grain imports from Ukraine, says they will not be sending any more of their weapons to Ukraine. Poland will still be this conduit where other countries, NATO countries, other allies can put weapons into Ukraine, but they're not going to be Polish weapons anymore. So I think that the war in Ukraine is going to continue. And if I was in Russia or perhaps China, I would wait out the West. Already we're seeing Congress in the U.S. Try to resist more aid to Ukraine. And this is before the 2024 elections. We're seeing the coalition in Europe, like maybe some fissures in it. Not broken, but maybe there's some cracks in it. I think that you wait long enough and the West will negotiate with itself, unfortunately.
Yeah, we have not ideal weather conditions in Europe like we did last year. That crack will turn into a crevice. Don't you think that Europe, if they face natural gas problems, energy problems with a cold winter? Last year they had unusually warm winter, that could be what really breaks apart the alliance.
It could, but I think that Europe has plenty of gas, and importantly, and I didn't have it in my commentary today, though I should have, and that is that strike in Australia at some Chevron plants has ended, which means that they only get Europe only gets about 15% of that gas, but it's a positive development. I think Europe's biggest problem is not so much going to be the winter, but it's going to be how to revive the economy when they're trying to reimpose this stability and growth pact, which basically tries to get countries to reduce their budget deficits. So without monetary support, they can't count on much fiscal support. And I think that leaves Europe in a weak economic position.
You have any numbers in euro that you're paying attention to, Mark?
Well, I like what you guys were talking about, that 106.10 area or so, 106. That's that FIBO retracement from last year's lows. I think we're going to have to go through that, partly because what I'm looking at is that a lot of people are still resisting. I don't see the capitulation yet. And I'm looking at the futures positioning, and the market, despite this, what is this, a 6-cent pullback, a 6.5-cent pullback on the euro, and the speculative community is still long euros. And sterling's come down. Sterling's come down what, a dime?
Yeah.
And the speculative market is still long sterling. So I want to see a capitulation. I mean, it's not. I don't like to say it to my friends who are long.
Is this off CFTC data?
Yes, CFTC data. Speculators still long euro, still long sterling, and I think they have to capitulate. They have to give it up to ghost before I can be more confident that a bottom's in place. So I'm looking at the possibility of maybe 104 in the euro. I'm looking at it. You got a chart up now of the sterling. I kind of see that as a head and shoulders pattern in sterling, and I've been looking at 120, and that 120.75 is the FIBO retracement, 38.2% of last year's of this big rally that you show from last September.
Hey, Mark. It's Blake. I'm sorry, I was just listening into you, and I 100% agree with you. But don't you find it really astonishing that positioning hasn't changed much in this move that we've seen in the euro? I sit there, look at it every week, and I'm like, is this thing broken? Is this thing not working? You know, like, how is positioning not, how's this fast money participants not like panicked yet in the euro, decline of this magnitude?
Yeah, Blake, that's a good question. The only way I can understand it is that a lot of the people I know who trade the futures don't just trade the currencies from the long side or the short side, but in spreads. And so I suspect that some of the long sterling and long euro positions are being offset with short yen positions.
Yeah. Okay. Fair enough. Thank you. Thank you for your
another washout. So that would probably take the Dixie up towards a level I've been talking about. I thought there might be a little interruption before we got there, but Dixie could trade near 109, 108.99. It's 61.8 back up here.
Yeah, that's a bold call. I'm looking at, when I was talking with Blake about this earlier this week too, this is what I find in my experience. If I look for these big moves, that tells me I'm putting my stop at certain ratios away from my profit objective, say 3-to-1 or something like that. And so if I'm looking for a home run, what that tends to mean for my own P&L is I have some big losses. And so instead of that, I like to just take smaller bites. Maybe it's my scar tissue. And so I think the next target for me is probably closer to 107.50 once we get above 106.
Okay, that's halfway back, Mark.
Right. Yep, there. That's about the 50% retracement.
Right there.
Partly because again, Dale, I'm thinking that we're going to begin getting as early as next week softer economic data, but the next big number, non-farm payrolls, that October 6th, I think that's what we're going to begin seeing the data begin rolling over, slower jobs growth. I think we're looking at something like about 150,000 jobs, which would be the lowest since early last year or so, non-farm payrolls. But again, we've got the strikes going, we got the student loans, we got the higher oil, we got tighter credit conditions. These higher interest rates take a bite. So I think the economy is going to practically stall in Q4.
Okay. So do you have a view on risk after, this recent action where we came off and put in a lower high, and, there are certain things really they were calling a lot of these stocks, it was narrow, right? So they were calling them the Magnificent Seven. Amazon, Microsoft, Apple. You know, to me, it looks like the Magnificent Seven lost their gun duel, and a lot of them are, you know, headed towards Boot Hill. What do you think?
Yeah, so I definitely am bothered by yesterday's gap lower opening that you show here on the charts. For
Yeah,
the
this is Amazon.
This is Amazon, but you see it in the S&P. I don't know enough about analyzing individual companies, but the S&P gap lower yesterday, disturbing because both yesterday and on a Wednesday closed on its lows.
Yeah.
But here's the thing that I would say is that, because I know we're all talking about higher interest rates weighing on stocks, but here we are, just about the end of Q3. The NASDAQ is up over 25% this year. And even the S&P, I mean, up 12.8%. So we come off a bit more today, but for someone like me, getting 10% in the S&Ps for the year, that's fine.
Yeah.
And so
cartwheel time at 20. Yeah.
Yeah. And so I am concerned that probably more downward movement on stocks. And again, that's what's going to happen next month as we get into the earnings season. S&P 500 companies, so much of their earnings come from overseas, and the strength of the dollar is going to be cited, I think, increasingly as a weight on earnings, even though people like me try to work with corporations and try to show them how to hedge and how to get favorable accounting treatment for the hedgings. So it's partly crocodile tears for these corporations who say that the currency costs them. I'm sympathetic to them, but at the same time, they've got plenty of tools to hedge. They will blame their earnings.
They better start listening to Mark Chandler and get their money over there to the bank so you could help them. That's all I could say. And so anything you want to wrap it with, my trading warrior brother? I mean, I you know, everyone should include you in their intelligence gathering. That's for sure. So
yeah, no, thanks. And I appreciate you guys posting the commentary. You know, a while back, I would when I first launched my blog, Mark to Market, a lot of people were just using, we were all new at the internet at the time. But now I think that I find myself going for pages that I can get a lot of different news and not just one person. So even though I still put a lot of time and effort into my blog, I do appreciate you guys reposting it and sharing it with a larger community.
Okay, well, you know, we're all fans, and lots of respect for your work, Mark. I hope you have a great fall trading season, and really appreciate you coming here and even laying out some numbers on Euro and Dixie to guide us forward. So
thanks. I think about it's not like my boss once told me it's better to be lucky than smart, and that luck, right, is where opportunity meets preparedness. And so staying alert and looking for those opportunities, anticipating those opportunities. So thanks a lot for the time today.
All right. So, you know, I agree with you, Mark. You know, some of my best ideas for the following week happen on the weekend. Right. So plan ahead and you won't do impulsive trading. So appreciate you, Mark. Thanks very much for being here on a Friday. Everyone follow Mark at Mark Making Sense and go to his website and read what Mark has to say and include it in your intelligence gathering. Thank you, buddy.
Thanks a lot.
All right.
Good luck,
Mark Chandler, everybody. That's a wrap for me for the week. I hope we added value to what you're trying to accomplish in a pretty difficult endeavor. Recharge over the weekend, and above all, don't just count your pips, count your blessings. See everyone next week. Have a great weekend.